And so when I think of that, and I think of the landscape that you just played out, yes, I do think that there will certainly be a world. I'll take it one step further. I think that everything will end up on a blockchain, and there'll be a world where you'll take your Apple shares, you'll wrap them, you'll drop them into some DeFi protocol. You'll get the double dip either by harvesting the yield farming and the dividend that you get from owning the asset. And so now you're going to juice whatever the Apple return is by whatever you can do with it inside of the on-chain universe.
Welcome to another episode of Derivatives Decoded. Today I have Jason Urban, Global Head of Trading at Galaxy Digital. Welcome, Jason.
Great to be here. Thanks for having me.
Beautiful. So before we jump into things, I'd love for you to maybe take a moment to introduce yourself to the audience. Tell us more about how did you get to where you are today?
So it's an interesting path. So I took a job more or less out of school at Goldman. Ultimately, in the index options space, ultimately becoming head of the index options flow business. So think in those days, it was VIX versus variance swaps versus listed market. And that stool, you could never quite get all the legs to line up. So there was always an opportunity. And then obviously over time, at first that stool was like a ladder with a nub, but then so there was a lot of money to be made. And then over time, it actually became a stool. So I was there for a decade, and in 2009, late 2008, early 2009, they came to me and the team and said, we got a proposition for you because of the TARP situation and all the stuff that's gone on. There's a chance that your bonuses are going to be clawed back in future years. So I sat there and I looked at my boss and I said, so let me get this straight. If I make a lot of money for you, you're going to take it and give it to the government. If I lose a lot of money, you're going to tell me I'm a one-hit wonder, take me out behind the woodshed and treat me like Old Yeller. That looks an awful lot like heads you win, tails I lose. And I might not be the brightest crayon in the box, but I don't know that I like that. And just about that time, DRW Don was looking to expand his business because they'd mostly been a fixed income and commodity shop. And so it was an opportunity for me and a group of my team to leave Goldman and basically start up, a fledgling equities business there. I spent another decade at DRW. While I was there, I started a bunch of businesses, some of them inside of the firm. At one point, and it's a long story, but at one point we had 50,000 head of cattle, and me and an ag trader were running this business. And not like the futures, like we had cattle, actual cattle. I had cowboy boots, a 10-gallon hat, and it was learning to ride a horse.
As crypto as it gets.
Yeah, it was like I don't know, when the well, I'm not even going to get into an airdrop, what that means in the cattle industry. Totally different.
I can understand.
But also at the time, if you have to remember, DRW founded Cumberland, and so there was a very crypto curious atmosphere going around, and I was. And I'll tell you this story because it's a little bit humorous. So my partner and I in the cattle business decided to invite the 12 heads of the different businesses at DRW. We all ran something. One guy ags, somebody had government bonds, et cetera. Mm-hmm. So we all go to dinner. And what we did was we were doing all different types of cattle, grass-fed, and, you name it. And so we said, we're going to do a taste test. Because everybody's like, I like grass-fed, I like this. And we're going to say, all right, we're going to do a blind taste test.
Where's this dinner happening?
In Chicago.
In Chicago. Yeah, that's what I expect. All right.
So it's at Chicago. Yeah. We're at Del Frisco Steakhouse. Uh-huh. And we had gotten one of the cattle suppliers to send us all the different, so grass-fed, non-hormone treated, corn-fed, corn-finished, like the whole thing. And we had it cooked by the same chef, in the same kitchen, everything's the same. So now you can't argue that it was whatever. And we did a blind taste test. And so we're at this dinner and we're, typical trader, having a good time, laughing and telling stories. And guy sitting across from me, I'm going to leave his name out of it, but he's a well-known crypto guy, turns to somebody next to him and says, hey, I just bought 200,000 ETH for a quarter. Now I'm having a conversation this way and he's sitting there having that way. And I said, excuse me for 1 second. Sir, I didn't say sir, who used his name? I said, bought 200,000 what? He's like, Ether. And then I'm thinking to myself, for a commodity shop, like the gas?
Is that another metal somewhere?
I thought it was the gas. Like, I was like, and I said, the gas. Like, I was like, what are you, a dentist? And and he's like, no, it's Ethereum. And I remember flippantly making the comment, oh yeah, you and your crazy internet money. And I went back to my conversation. And that night I went home and I said, I made the mistake when I came out of college of thinking that the internet was only going to be, used for email. And, now I come home every day and I got to Indiana Jones my way through a pile of Amazon packages to get in my house. I said, I'm not going to make that mistake again. And that was when I got into crypto, or at least started to become, involved, and then started a lending business called Drawbridge Lending, late 17, that Galaxy invested in. And they invested in us and BlockFi at the time. We were the two lending businesses. And we were more of a structured products business using my options background. So, we were lending money. Client would put a collar on, and then I would lend money against the put strike. And so the put was for my protection, so that I was always principally protected. And he got called away, but the skew was so, because you're dealing with a 100 vol asset, you had a call skew, which you still have today in some cases.
And you were only lending blue chip, right? Like Bitcoin and ETH.
Just Bitcoin and ETH. I mean, we would dabbled in some other stuff like there, but at that time it was hard because I had to find somebody that was going to write the option to me.
Yes.
And so Galaxy was one of the few places at the time that would do that. And so it was a natural fit that they were an investor, and then they were underwriting the options risk, and then we were lending the money. And so that was the, me getting into crypto, and it started to really do well. And in March of 2020, the business hockey stick, because we had the COVID crash. We went from 8,000 to 4,000, and all our clients had like the 7,000 call or put on rather. And we blew right through that. So they were happy. Everybody was like, and so the business really took off. And that was when Novo was like, listen, this is the kind of business we want inside the firm. And so that was when I got acquired, came over to run. My conversation with Mike was like, listen, I started a company to not have a boss. I don't really want to do this. I need to have something. He's like, well, you can, help run our trading business here. And so that was how I came over and, started, in the early days where the book wasn't that big to getting it to where it was, where it is today. Mm-hmm. But that was kind of my pathway into crypto and the whole trajectory of trying to use options. I remember going and begging the CME in 2018, listen, you got the futures, give me the options, they're coming, 2 years later. Like sometimes it's, easier said than done.
How would you describe Galaxy's business today? Like would you, consider them a prime broker within the space? Would they be a large institutional participant that does a bunch of different things? How do you view the business?
I would tell you it looks and feels like an investment bank circa 1995 to 2000. Mm-hmm. We touch everything in the ecosystem. So our three main verticals are the markets business, which is that's my business. There's an asset management business. And then there's an infrastructure business. Inside the markets business, it's, there's an investment bank that's part of it that I don't touch and I have no business touching, but there's, and run by a good team. But inside the markets business, or the trading, sales and trading business, it's spot, which is both voice and electronic. It's derivatives, which is, everything that you would expect them to be, lending, and then all the on-chain ancillary activities. And we've kind of been the incubator for a lot of things. Like for a while, the staking business was residing inside of ours, and then we spun it out into the infrastructure business. So there's that. There's obviously the asset management business, which is ETFs, public and private funds, active and passive. We generally work as a partner. So our partner in Canada was CI. It's Invesco here in the US, Itaú in Brazil, DWS in Germany. And so we try to look for institutional partners on that asset management side. And then in the infrastructure business, we have the large mining facility in Texas. We have a validation business. I think we're the second largest validator in the Solana ecosystem, mm-hmm. for instance. And then we have a custodial technology business in GK8 that we bought out of the Celsius bankruptcy, which is really trying to be the back end for some of these globally significant banks and others that need that tech. But like, I want to custody Bitcoin, but I don't really know what it is. They're still spelling Bitcoin with a space. And it's, I was like, oh, okay. So within that construct, we basically touch all parts of the ecosystem. Mm-hmm. And inside of the markets business, I would say, we're client focused. I know people look at Mike and some of the trading that he does, but really Mike's a great trader. He's also an excellent investor. And so a lot of the early, big wins that Galaxy had was, Mike having the courage to say yes, and an exceptionally smart group of people that were able to identify the right players in the ecosystem and why, whether you were betting on an idea or betting on the team, and then how did that play out? And so that really worked out well for us. And then a very solid, robust risk management overlay on all of that. I mean, there's a reason why we're still here. Is I'm 28, if you wouldn't notice. Look at this.
I thought you were 24. But...
yeah, listen, I don't know why we're on camera. I got a face for radio here. And maybe that gives you a little bit of a color of how Galaxy fits into the ecosystem. And sometimes we can act principally if we need to, which is also helpful when facilitating large client flow. Because we have a balance sheet, somebody comes in and wants to do a large trade, we can help take it down so the client gets filled, and then we'll warehouse the risk and work out of it over time. So it's...
I guess let me ask you this. Is Mike's vision, which I'm guessing you might be sharing as well, for Galaxy to become like the Goldman of the space? Is that where you guys want to go?
Well, here, Goldman, like as a former Goldman person who left, I sometimes I think to a degree, yes. And what I mean by that is the great things about Goldman were clients got excellent service. They got white glove, treatment all the way through, that we were, party or part of major deals and major, transactions, whether we were buying or selling or marrying people up. I think that's the vision for Galaxy broadly, to be always relevant in the conversation in a helpful way. Like, hey, I'd love to have Galaxy as part of this. I think there are times where Galaxy gets lumped into, they're the robber barons who are coming to do whatever. And that truly isn't the case. Like, you can share a sheet many times, but you can only eat it once. Like, we can't screw our clients over because as soon as somebody thinks that we have, everybody will think that we have.
Yep.
And then we don't have a business and a franchise anymore. And that, I'm very protective of that. Let's help our clients make sure they have a great experience so that they tell all their friends, like, hey, they're actually open for business in this vertical, and I actually had a great time. Or, you know what, they'll do the deal and they'll do your size is their size, but you're going to have to jump through some hoops because they're buttoned up a certain way. But rules and regs are important to us.
There's a lot of people that think that the nature of this is very transactional, but at the size of the deals Galaxy comes in, relationships matter so much.
100%.
Right? It's they'll do it once, they don't feel like it, they're not going to do it ever again.
Yeah. And everyone else will learn, that so-and-so did this deal and they got mistreated. That's a hard sell cycle, and especially in an industry where trust is so important. It's funny, we created this industry, for permissionless and trustless. But the reality is large transactions, because I know you, right? And I trust you, because once you hit send, it's not coming back.
No,
it's not.
And it's a partnership that's about to kind of flourish, right? It's something to build for the future, right? Yeah. I want to dive a little bit deeper on your trading business and talk a little bit more about your insights, where you see the future going. Now, obviously, you've heard, I guess maybe, I'm not sure if it's confirmed yet because I just got here, but IBIT options.
Yeah, they started trading today.
Beautiful.
I think that's going to be, it's interesting. If you look at say, MicroStrategies, and you look at the sheer volume there, and you look at the options open interest there, it's massive. And so I think that flow is going to attract new money, fresh money into the crypto ecosystem as a way for people to manifest a view that's readily available to them. Because not the average person on the street is going to open an account at a Galaxy or is able to open an account at some one of these offshore venues that won't take you as people, et cetera. But now there's IBIT options, and there'll be other things that follow. Where I think that becomes such a virtuous circle for the whole ecosystem. If I go back to my early career and think about the SPX on the CBOE and the SPH at the Merck at the CME, and that some clients can only trade SPX, and so they would trade there, but it was a lookalike in the future space, and flow beget flow, and it started to cycle in on itself. I think you'll see the same thing. I think you'll see a captive set of clients that only want to trade, listed options in the U.S. And you're going to see clients that want to trade options on the spot because they have the spot and that's what they want to post as collateral. And that's not an option right now in this universe. And so while you still have that prohibition of crypto not being accepted collateral in a traditional ecosystem, I think you're going to see, great ARB opportunities. There are going to be idiosyncrasies. It's funny. I was reliving it today with one of the guys on the desk, and he's like, yeah, these are American. I'm like, yeah. And the CME was American and the SIBO was European. And, you had to figure out your early exercise premium and what pricing model you were going to use, or using an iterative Whaley model, or, whatever it is. Like, you start to go through all that, you're going to see those same things, those same opportunities spring up here. And so I do think that, this isn't going to cannibalize Luke's business at Deribit or the other things that we see happening. This is only going to make that more robust. And it's only, it's the next order of things. Like, what is the next ETF? Is it Solana? Is it Ripple? What is it? And then there's going to be options, and then you're going to have that here. Now you're going to have people, trying to figure out how that works. And I think that's going to be a nice little 18-month golden age for options traders, especially people that are comfortable in both places. Now, maybe I'm being a little too Pollyanna and talking my own book and all that, but the reality is, like, I've seen it happen before. It's going to happen again.
I don't think I do agree with you. There's it's not going to cannibalize, but it's definitely going to, just like Luke has mentioned multiple times, right? Maybe they're not going to be at 80% market share anymore, right? It's going to be a little bit below, but then that's a much larger market anyways.
Exactly.
But here's
a bigger pie.
I guess the question that I would love to hear your thoughts on, so with this new regulatory environment that we're getting into, right? It is very plausible that at some point in the very near future, right, that venues like Deribit and OKX are readily available for investors based in the U.S. U.S. persons can actually touch those venues, right? And at that point, when you look at these options, right, on the regulated TradFi venues like SIBO, NASDAQ, whatever it is, it's clear that obviously the institutions that are based in the U.S. would still prefer to go through their broker or their prime broker, right, that they're very familiar with, and touch these options on the ETFs. But yet still, those are, while they're conceptually both options, but they're completely different ways of actually speculating, right? You got FX style, you got equity options, they all come up with their own different world. Now envision a world where we live, where an institution actually has access to both legally, no issues whatsoever. They could do this and they could do that. Do you see that hybrid mode becoming the de facto way of institutions touching the world, like this world of digital asset derivatives?
I think eventually. I think the thing that you have to weigh as you think through that is how long it takes the largest of those institutions to adopt. And I'll tell you a funny story. So we were hosting an event for one of the regulatory bodies at Galaxy's offices here in New York. And the event was, the first half was discussing the movement from T+2 settlement to T+1 settlement. And then the second half was digital assets. So we were hosting it, and I want to say it was for the CFTC. And so we're hosting the event. And so we spend the first hour and a half, 3 hours in a room is just killer for me. But first hour and a half, talking about T+1 settlement and all these, and the largest financial, it's JP, it's BlackRock, it's, you name it. It's the pantheon of the largest financial institutions, and they're like, I don't know how we're going to get it ready in time, and how are we going to move to T+1, and what if, and they're going through this. I then, after I said, okay, now we're going to move to digital assets, and I gave a little warm opening, great to have everybody here, the usual. And I said, it's great that we've spent the last hour and a half trying to figure out T+1. And I can tell you guys that here at Galaxy, we offer T+1 today to our clients, but we do it as a courtesy because most of our clients want to settle atomically or T+2 hours.
Yeah.
And we do T+1 for the TradFi guys that can't get it right in time. And so when I think of that, and I think of the landscape that you just played out, yes, I do think that there will certainly be a world. I'll take it one step further. I think that everything will end up on a blockchain, and there'll be a world where you'll take your Apple shares, you'll wrap them, you'll drop them into some DeFi protocol. You'll get the double dip either by harvesting the yield farming and the dividend that you get from owning the asset. And so now you're going to juice whatever the Apple return is by whatever you can do with it inside of the on-chain universe. I think that that's where that naturally all goes, and that's where that becomes an important thing. I think the other important thing is, how do you deal with staked assets? Everybody, you take your ETH, you stake it, it's still a valuable asset. You should be able to take that and deposit that somewhere. And there's we will do that. Now, granted, it has to be our validators because there's certain rules and laws about liens and, and things of that nature. But when you can do that, like, I don't know how quickly, a large financial institution gets comfortable with that. I think that in time they will. They'll first outsource it to firms like ours, and they'll say, hey, be our back-end staker validator, and then I'll feel comfortable taking XYZ firms' clients' assets as collateral to do some other trade. Like, there are ways that this goes. How long, how comfortable? I think that people are now, I would tell you that the pickup in traditional institutional interest is at an all-time high. Like, and it's different than it was in 21, where everyone was a tourist. Now it's like, shit, I got to get this done. I got 4 years of this thing is going to be, and we're not ready. And so people are like, what can we do with you to help get ready? And so that's one of the why I'm wearing a blazer, because I spent all day with regulators, and I'm looking not like a crypto bro, but TradFi, guy. I'm going to use a different word, but I don't know where this is going to end up. So at the end of the day, they feel comfortable with that. So that's one of the values from our perspective. But I certainly think that happens, and I think the people that are quick to, one, set up plumbing in both universes, and two, have the ability to move seamlessly, will be able to take advantage of it for a period of time.
I mean, I honestly, I'm so glad to hear you say that, because, this is precisely kind of what we're trying to do, at least from a technology standpoint here at Kemet. It's sort of like, because we believe that world is eventually going to be where most are going to be. Yeah. But yet still, this also, technology aside, which is in and of its own a very, very complex challenge, from a market structure perspective, there's still a lot of efficiencies that are just not there compared to TradFi.
Oh, yeah.
The biggest one of those is, true cross-margining through a prime broker, right? Like, they've got all this stuff and margin efficiency. I bet you deal with this every single day as a global head of trading, right? Like, so how do you envision a world of actual true cross-margining being a reality within the digital asset derivative space? Two, is Galaxy trying to be that first real prime broker in this space? Because let's be honest,
it's a really hard problem. So answer your second question first. Yes, we have a prime offering. We are just now rolling out that cross-margining feature, and then we're dog fooding it as we speak with ourselves to make sure that nothing breaks, because there's nothing worse than saying, hey, I'm going to give you white glove service, and then have the sad trombone noise when the guy's like, well, I can't trade. I was like, I'm sorry, sir. That's a horrible experience. We're being very thoughtful around rolling it out. To answer your first question, the hardest part of that is we're dealing with a bearer asset. So unlike traditional finance, where you've got an FCM that connects to an exchange, and the exchange is de facto backed by the government, even though it's not, it is, right? I mean, there's no way the U.S. government lets the CME or the New York Stock Exchange blow up, right? Like, it's just not going to happen. And so you have a system where everything is trapped in that system, and you can't go anywhere with it. You can't take your share of Apple, put it on your phone, and disappear to Belize. Like, that doesn't, like, okay, great.
Someone is trying to do that.
yes. But hey, I saw the Die Hard. It's getting to be Christmas time, right? The bearer bonds in the basement. Like, but that's it. Like, it's just like, it's very few traditional assets fit into that. But in crypto, I can send you a bunch of corn, and you're sitting on it now, and you can disappear, and I'm going to be like,
where'd you go?
What happened? How am I? And so you have to be thoughtful, and you have to have the plumbing and the balance sheet. And so the plumbing part of it is, like, the way we're approaching the problem is saying, okay, we'll give you liquidity and our liquidity has to be best in class. Like it can't just be, all right, here, I'm putting you through my sheep shearing machine and you're having a bad experience. And so that's been a challenge. And to do it in a capitally efficient way that allows for you to deposit 20 assets to me, and I say you can buy up to 100 on my platform. And as long as you leave them with me, I don't have to worry where you're going. So if you're trading, great, they're with me and I don't have to worry. And you can use 80 of mine and 20 of yours and get your leverage. And when you're done, you settle up accounts, you take your 20 plus the 20 you made and go home, right? So we're working through it. Doing that, though, and doing it in a way that, is regulatorily compliant, that has the right connection points, that has the appropriate capital, like it's taken us a while and it's a lot of iterations. So we're in the process of rolling that out now in a way that we think that our institutional clients are going to like.
You're right. I think that's the key word, like coming up with the framework that actually brings consensus amongst these dealers or takers even, right? And that's part of the story where it's like, because there is no playbook, everyone thinks that things should be done a certain way and no one can actually come to the table and say like, well, but this is how it's supposed to be and this is what the regulation is saying, right?
Right.
And because there is no regulation, right? So everyone is going to come up with their own idea. But I'm hopeful that a lot of that is going to change. I mean, I know you mentioned today you've had some interesting conversations with a lot of the regulators, right? Like this is, probably something that we're going to see sometime soon.
I think that what you're seeing on the regulatory front is finally a commitment to at least have a conversation. Mm-hmm. And what we haven't had for 4 years is an environment where, you can show up and say, hey, we want to do it right. What do you recommend we do? And you wouldn't get an answer. And so you'd be like, I mean, that doesn't feel right. Yeah. Like, I'd like to try to do something. I don't want to go to jail, right? Like, I mean,
I hope so.
I mean, like maybe I look like a good cuddler, but I really don't want to go to jail. And so at the end of the day, you're trying, and when the doors would close on you or you'd get, the cold shoulder, now it finally is feeling like, okay, how do you want to think about it? How do you think about a round table type environment where we could put some of the best and brightest minds and different constituents in your ecosystem together to work through what that regulation needs to be, because we need to have something, right? It can't just, because you're going to undermine our industry and the thing that we believe so strongly in, if it just becomes a cash grab robber baron scenario. Conversely, you can't have what we've had where it's like, just, spelling Bitcoin without a space could land you in the clink. That doesn't work either. I got to wordsmith everything I do. So it's,
Do you see other regions like, bright spots out there? Like I know, like obviously the UAE and Singapore, they're kind of like really putting in a lot of force behind this industry.
And I would put Hong Kong there. I think that each of those three jurisdictions have some things that they're doing that are excellent, and they're getting, either because of politics or, the way things have always been done, there are areas where you're like, all right, we got to work through that, right? But those three, I'd say Hong Kong, again, obviously pushing forward, and that pipe into China is interesting, right? China's, there's so many people, there's so much wealth that's there, and it isn't turned off to crypto. I think that there's a misconception. Sometimes we hear, China's closed for crypto. And there were periods of time where they had a heavier hand, but I think there's also economic realities there that are making it, like if you're in a province that has hydro and has no industry, it's naturally like, why wouldn't you mine Bitcoin?
Yes.
Right? Like, I mean, you're not going to be able to store the hydro. Like, it just keeps going into the ocean, right? Like, there's nothing you can do, and you have no industry, and at least plug in a bunch of ASICs and see if you can, meet your budget for the quarter.
Yes.
So I think you'll see that area of the world warm up. I wouldn't say it's a bright spot, but at least it's not a, whatever it is, 262 Kelvin, where we're sitting there like, oh, geez, this is absolute zero.
Yeah.
It's, I think that's a better, I think in Europe, we've seen fits and starts. We have Mika coming online in January 1st of this upcoming year. Mm-hmm. And anecdotally, we're hearing that some countries are moving faster than others. And the MiFID playbook that you have to have with derivatives there will be interesting.
There's a couple of players already that are going to be coming up and running, right, with their MiFID licenses, right, like for derivatives, right, like whether it's D2X, I think, and there's a bunch of others actually. I think there's quite a move there, right, compared to where it was. It's surprising that there's movement everywhere, but the U.S. Now I'm hoping things are going to change.
And it'll be really interesting to see how the rest of the global geographies respond, right? If we move hard and lean into crypto here in the U.S., does that mean that these countries have to become even more forward? Do they, which is probably my opinion, that they're going to try to keep up with the Joneses, like, okay, somebody new's here on the block, I got to pedal faster.
Yeah.
That's my opinion. I've heard people, say, well, no, actually they might say these guys are crazy. Let's take a step back, let them blow up. And then I don't know if I buy that, but maybe it's the optimist in me that says, it'll be a little bit better than it was. So
I think it will be a catalyst for like their first mover advantage from their point of view. They probably want to keep that for as long as they want, right? And the U.S. is a behemoth, right? There's no other market that is as big as this.
Yeah.
Put 30, 40 different markets together combined, and it's still not as big as the U.S.
Yeah. There's a huge opportunity for them to create enough space. I always use the swimming pool analogy. You've got, and I use it more in my business. I'm like, you've got the big banks sitting on the sidelines. I'm just off the starting block in the water. The people that cut more corners are farther up in the pool. Now, I'm hoping that they get disqualified. I don't. And by the time I get to the wall, I can make it back. And hopefully, it's before the big banks have jumped in and started to eat our lunches, and I can make it there and back. So I think there's a similar thought process here with global regulation.
I want to wrap this up with one last thought to kind of just get your ideas about I think options is definitely a space that's going to be experiencing massive growth, right? I don't think anyone who has ever been on the show or anyone that I've spoken to on other conversations that actually know what they're doing can disagree with that. The only sort of thought that comes around is sort of where is the most growth going to happen initially from a trading perspective? Is it going to be OTC or because we've seen a lot of the OTC space recently experience a lot of that growth, right? Or is eventually that's just not going to be the case anymore when the regulation just makes it very easy to trade this stuff on screen and anyone can onboard these exchanges.
But then you have, so I say this often, it's one thing to have the right bet. You bought puts when you were supposed to. You yoded into calls before, we ripped 50%. There are you can have the right bet.
Yeah.
It's another thing to get paid to have the right bet, right?
Yep.
There's that element of things. And so what you'll see is you'll see the larger players not only look at pricing, but also credit quality of whatever. Is it a venue? Is it an exchange? Is it, a counterparty? So in some cases, that flow will stay OTC. In some cases, it'll move on to screens. And then the question is, who and where on the screens are you, is it the incumbents, the constituents that are here now? Do they win? Or is it some new player that we haven't seen come online? I mean, there's this, yesterday DJT buying, or rumors of them buying back.
Yeah.
I'm like, okay, well, where does that go and what happens?
I'm not even sure that's true, honestly.
I don't know that it's true either. That's why I said that's why, conceptually, I don't know that answer. I think that there are a couple of things that are true. People will, if prices are the same, they'll always take a better credit, whether that's an exchange or a person. You're going to do that. Mm-hmm. And you're going to do what's easily linked to all of your stuff. If you can move money from your Citibank account, as opposed to, okay, I got to move my money from Citibank to Coinbase to buy the stable, to deposit it there, to buy the call that there are people that are going to do that. And then there are people that are going to be like, forget it, I'm going somewhere else. And so I do agree with you 100% that this part of the industry is going to explode. We've already seen it. I mean, part of my discussions today is we've crossed the threshold. We are now in the process of becoming or are a swap dealer. And so that's an onerous necessity that I
thing, yeah.
yeah. Listen, there are a lot of euphemisms I can use for what this is, but I'm just going to leave them alone. But it's a blessing and a curse. We're a victim of our own success, and so you'll see people doing that. The other thing to be cognizant of is exactly that. As these prices climb and the underlying asset values go up in a very pro crypto environment, people will be crossing that threshold, and that will become a gating issue because, I mean, it's cost us, $10 to $15 million just this year to stand this thing up.
Yes.
There's not a lot of places that can afford that or are willing to afford that, right? Like it's kind of a go big or go home moment, right? Because you're not doing it to just trade 8 billion annually. You got to trade 80 billion to make your 10 million investment look good. So there's a lot to be determined. How this all manifests, it's a good thing though. The water is going to get sprayed onto the whole ecosystem, and it's going to find its pockets, and it'll be good times for traders, for service providers, hopefully for banks, and if we do it all right, the regulators can leave this thing without feeling like they got hoodwinked as well. So
it's a lot for whoever's listening to this to think about. But Jason, thank you again for joining us.
No, this is great. Thanks for having me. It was a good conversation.
Thank you.